Ladies and gentlemen, kicking your welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 0.59% there. On the S&P Nasdaq 0.3%. Semiconductor actually green down. Russell 2000 got hit pretty hard here, 2% negative. Looks like Apple's up, Amazon also, Nvidia, AMD. However, Tesla got hit along with the Meta and Netflix. Bitcoin down, gold, silver miners as well. Dollar up, oil down, treasury bond down. The VIX is about 4% positive there. Let's take a look at the ETF. Spider! 65-minute chart here. So this is where we closed yesterday. It looks like we actually saw a slight gap up here. As you can see, this is where we closed yesterday. This is where we open here. However, that gap up is not enough for the price to be sustained. And that's a very tiny gap up there, especially we're dealing with boss bears in this vicinity. You see this down gap. This has been the focal point of my analysis in the last week or so, right? This is the level that bulls must fill. Otherwise, you're going to witness the wrath from the boss bears as you've seen today. So if the bulls do not finish the job completely, we could still see very much angry boss bears shooting down the bulls and seeing some bloody hell. So you can see on that fourth hour, we finally lost the micro term. And then it seems like the short-term moving average is there to capture it. So as you can see here, this is the first time we're retesting short-term moving average, right? You can see the short-term did act as a resistance a little bit, and then it seemed as though bulls were able to break above that short term, that green moving average there. And on the fifth hour, right, on the fifth hour, we broke below the short term, at least during that intra hour. However, as you can see, the prior swing high right here, that swing high acted as support right there, and that's the vicinity kind of near to the midterm moving average as well. So you can see that 431 acting as new support.
Perfect.
And we threw that dragonfly doji right here on the fifth hour, and with that, buyers were able to stay above the short term. That's a good thing for the buyers that they were able to stay above. They closed above the short-term moving average on that fifth hour. And we did see a little bit of rally there. You can see on the last hour. And of course, we see that rally on the last hour. It comes right to that micro-term moving average, as you can see that upper wick here. Why are we stopping at the micro-term moving average? Why did price got to that micro-term to the cent here and pull back? Because that micro-term acted as support here. Now it is acting as resistance because it was that contractual agreement the micro-term had with the buyers that ended with this downturn right here. When this guy came down, when boss bears shot down the bulls, well, micro-term said, I'm no longer on your team. Now I'm going to support the bears. That happened right here. So at least with this recent move, bears are able to make this kind of a relationship with the micro-term, and that's sort of what happened here. But good news is here for the bulls is that at least the short term, the green moving average, seemingly as of today, as of now, still supporting the buyers. And that's why we have that, gray or the dragonfly doji there. So going into tomorrow, if this micro term cannot be reclaimed, we're talking at least first 2 hours tomorrow morning, bears are going to continue to put pressure, because this could potentially be that bearish flagging pattern, right? We see a downturn, we see a little flag, and then on the next leg lower. Bears want to retest that midterm moving average, which is currently at 430.26. And keep in mind, we have the double top, and right on top of that, we have the down gap that wasn't filled. So if we look at this as some kind of a double top neckline, that comes right here at 434, right? So not only we have the neckline resistance here, we also have the micro term now flipping, changing team here, supporting the sellers. So now go into tomorrow. It's very important for the buyers to break above and reclaim, see if they can actually make that agreement once again to see if they can reclaim the micro term. If not, bears will break the short-term moving average. So we're stuck between micro term and the short term. Let's check out that oscillator. Well, to make things worse here, ladies and gentlemen, we do have a bearish divergence. You can see we initially crossed up, but that crossing up earlier today quickly whipsawed back down. And with that, we have this nasty slope here. As you can see, that's a nasty slope because obviously you can see in a price action, we have an equal highs. Yes, that's an equal, right? There's no slope here. These are equal length or equal level. Well, that oscillator is not giving us anything equal. That's a lower high, and that's what is known as a bearish divergence. So we are seeing the bearish divergence. Oscillator is rolling over. And as you can see, going into tomorrow, the oscillator with the bearish divergence, the oscillator is favoring the sellers. So unless, it's all about the momentum here, unless bulls can make a move above the micro term first thing tomorrow, minimum 2 hours, they need to stay above the micro term. And if they can't do that, 431.15 will be retested, and the midterm moving average will be retested. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening. Go train tomorrow.